incredible, mysterious movements on the blockchain. So should we interpret them? What's happening that we're seeing price increases, but we don't know what's causing them? What's going on with the decreased volume? Are we waiting for a distribution phase? Should we be exiting our cryptocurrencies at this point because a deep correction is coming? You'll hear the answers to these questions, and not just these in today's episode, and you'll also find out how to manage your cryptocurrency portfolios in the coming weeks. What will happen with ByBit EU? Is an app that blocks Instagram and social media good or bad? All of this in today's episode, so buckle up and enjoy the show. So listen up, we're starting off with Bitcoin ETF flows. And to be honest, I couldn't wait to check on-chain data, especially after the gains that happened on Monday. Of course, the gains ended on a positive note since we were exiting our long positions. Right now, we're waiting to see what the price action will show so we can start looking for new short opportunities. When I glanced at the chart and the on-chain data, I noticed that on Monday, in the context of the price increase, ETFs didn't really have much of an impact. Yes, there were some inflows recorded since inflows are happening almost all the time, but they were much smaller than one might have expected. So listen, who was pushing up the price of Bitcoin? Because these inflows weren't as significant as before, yet the price really soared. Let's try to conduct an investigation, folks, using the next on-chain data. So let's keep going, Stasiak's charts, and let's move on. Bitcoin spot volume bubble map. The spot volume map also doesn't tell us who was driving it. We still have green dots, which means there's a decrease in volume across all exchanges, not an increase, which is especially strange, though it's not something we haven't seen before. So there's a chance that the mother-in-law is behind the price surge. And smoothly continuing here, since one thing connects to another, namely the sell-side risk ratio. I thought that maybe it was an indicator error, so I decided the previous indicator I showed you, so I decided to check it on the well-known SSRR, not to be confused with the USSR. And here as well, as you can see, on Monday, despite solid gains, the volume was dropping, which raises questions about the validity of all these increases, because the divergence between rising prices and falling volume is quite strange in general. Such increases without volume are usually, you could say, very risky, and even suggest that we are simply inflating a bubble that will have to correct itself. So coming back now to the main indicator here, which is the spot volume bubble map, you can notice one more very important thing. Namely, if we zoom out the chart, we can see an almost one-to-one correlation with the second peak during the 2021 bull market year. Take a look at how it looked here. I'm specifically showing you the green areas right now. Now you need to take a look here, and I'll just mark a green dot to show you exactly how it looked. Back then, that second peak was also formed with declining volume, which indicated a secret distribution, that is, whales selling off and the price being pushed mainly by retail investors. The question is history repeating itself? If we assume that history is repeating itself, then, in my opinion, during the current move, 115 to 118,000 could very well happen as the final price spike without volume, driven by retail, the last ones hoping to make a profit, who will end up stuck holding Bitcoin for the next 4 years or selling it at quite significant losses. That's why, for quite some time now, I've been telling you in all my episodes, take profits from Bitcoin, take some modest profits from Ethereum and some from altcoins. Because if we do see a price drop in Bitcoin, it's possible that everyone still hoping to make some money will start piling in. That is, retail will start piling into Ether and alts. This could allow us, those who bought in fairly early and are sitting on relatively decent gains, maybe not huge, but still in the green, to make some more profit here. So personally, I'm not selling my spot holdings. I haven't sold all my Ether yet. I'm waiting, because I think we might see a situation similar to what we had 4 years ago. I'm not saying it will be exactly the same, but similar moves could definitely happen. So make sure to stay alert, because if history repeats itself, don't hold on to your alts for too long either. At this point, I've pretty much exited Bitcoin entirely. Even if I have anything left, I won't be upset about it. It'll just stay with me until the next bull run. But I'm definitely going to be paying very close attention to Ethereum and altcoins right now, and if we get a pump of 1, 2, or 3 times, I'll definitely be getting out, taking profits, and being happy that I made 200 or 300% during the bull market. All right, but let's take a look at what's happening with the long short-term holder threshold. When it comes to what long-term holders and short-term holders are doing, we can see a certain kind of pattern here. Of course, the long-term holders are represented by the blue line, and the short-term holders by the red-pink one. Every time the blue and pink lines cross, it signals a trend change in the market. So, for example, we had a crossover here. It's no different. Now short-term holders have started selling, while long-term holders have started buying. And as a result, we've seen the recent price increases over the past few days. Remember, on-chain charts are not for the impatient. They're not about what's happening right here, right now. It's not like you look at on-chain data today and tomorrow. The assumptions, fundamental analysis, or the elements that come from it will immediately play out. No, usually on-chain data shows us what might happen in the future, or rather the correct interpretation of this on-chain data will tell us how we can look at the near future. And my dear friends, the near future doesn't mean days, it means weeks. And now the question is, how much longer will this last? We don't know that. However, the greatest chance that they will end is when these two lines cross again. I'm talking here about how long the purchases by long-term holders will continue. And I think that if in a week or two we do another on-chain episode, this blue line here will be dropping sharply downward. Because long-term holders won't keep buying forever. They also need to realize some of their profits, but time will tell. We'll see how it turns out. All right, let's move on to the Bitcoin Coinbase premium gap. And still, listen, we haven't found out yet who is actually buying. I was hoping that this indicator would finally tell us and solve this mystery, but it didn't. There's no answer here either. The Coinbase premium gap has been dropping for several days, which means that the buying pressure from Coinbase is decreasing. So the biggest whales in the United States are not buying. Even they aren't buying. In fact, you could even say they're slowly starting to sell off. Here at this point, we can see the Bitcoin Coinbase Premium Index. Of course, the fact that the buying pressure from Coinbase is decreasing doesn't mean they're not buying at all and only selling. On the contrary, they are still making purchases all the time, but these are simply getting smaller compared to what Binance is doing. So you can't say that Coinbase is only selling. Of course, Coinbase is also buying, but to a much lesser extent than the level at which it's selling. And now, at this point, we're looking at the Bitcoin taker-by-sell ratio. And here we have quite an interesting situation because we've already gone through more than half of the indicators I have for this episode, and we still haven't found out who pumped us up so much. Here, however, we finally get a fragmentary piece of information about what happened. Specifically on Monday, the taker-by-sell ratio reached its all-time highs for this cycle, the highest level in the entire cycle we're currently in since January 2023. This means that on June 19th, we saw the greatest dominance of longs over shorts that we witnessed in the past 3 years. This would explain why we're moving up even though the volume is decreasing. The lack of positions betting against the current trend means it's easier to continue the trend and there's less need to put up larger amounts of money. So it takes less effort and less money to move the market and make the chart go up. So we have an indirect answer to how it's possible that the volume is dropping while we're still rising. The price could have been pushed up significantly by people going long on the futures markets, not necessarily by spot traders, but rather by the futures market. So here, especially when looking at how strongly the delta can be loaded up, that is, the delta of those going long, you might expect a liquidity sweep, a removal of liquidity in order to set up some kind of correction. Well, in fact, such a loaded delta will probably cause a correction in the market. The question is, how deep will it be? Of course, if we look at the chart, we can see that we hit the last swing high quite strongly. And at this point, the correction that could occur would definitely be around $106,500 as a local support flip area. We'll see how it plays out, but for sure, if we want to think about deeper corrections, we'll be updating that on Discord. For now, I see a possible drop to 106,500. But listen, stablecoin net position change. The inflows from the tables to the market are decreasing, which may suggest less buying pressure in the coming days. We're starting to enter the holiday season, so the trend may begin to fade soon, and a general slowdown of momentum in the cryptocurrency market may also appear. That doesn't mean we should go into hibernation, the so-called summer sleep. We definitely need to pay attention to what is happening, because when everyone is resting, the biggest movements in this market can happen, but the stabilization of this upward pressure will certainly be smaller and smaller. The fact that there was no sell in May and go away, although in my opinion, even though everyone says it didn't happen, I actually think it did to some extent, because we saw a significant uptick and there was an opportunity to sell part of your assets. It doesn't necessarily mean that the summer will be volatile. Listen, the July-August period has historically always been characterized by lower volatility, and the situation with stablecoins suggests that this time might be no different. Of course, I approach this rather skeptically. I don't want to assume that just because it was like that before, it will be the same now, because this entire bull market we're currently experiencing is very, very diverse, very different from previous cycles, from previous chart structures. So I would rather look at it as, okay, there might be some relaxation because you can actually see on the indicators that there is a slight cooling off in the market, but you can't let your guard down. You can't stop being vigilant, because if we suddenly get any signs that, okay, we won't go any further, we simply won't go higher because there's nothing to build on anymore. We cash out of Bitcoin, push a bit more into altcoins and Ethereum to squeeze out some more money there, and then we start the bear market in the second half of this year. That situation is possible. So personally, during the holidays, I don't plan on slacking off. I'll be keeping a close eye on the charts because we're right on the edge. Either we push the chart up a bit more, the general public starts piling in again, and we kick off the bear market, or we immediately start a correction. You can't afford to miss the moment when we start getting confirmation on the chart that this is it, that it won't go any higher. Let's start exiting our coins because it won't go any higher. So you definitely need to keep an eye on that. And now let's take a look at Bitcoin futures retail activity through trading frequency search. On the other hand, when it comes to metrics specifically related to the futures market, which is actually the one we're most interested in, we can see that bubbles have appeared, indicating a large accumulation of retail orders. Let me remind you what the charts looked like previously when these bubbles appeared. Interestingly, on this indicator, when it comes to futures, this is only the second time in this cycle that this warning has been triggered. The first time it happened here, so you could say, looking at the chart, let's switch to the daily view. So you can see it clearly. The last time these bubbles appeared was at this point. We experienced a long-term distribution, which you could say lasted around 179 days from the peak, so quite a long time. Now, these bubbles are appearing again. You could even say they're bigger than last time. So now it looks similar, as if a similar scenario might play out. So I'd be cautious with the desire and pressure to believe that we'll reach $130,000 on Bitcoin, because honestly, at this moment, I don't think so. Hey guys, naturalized profit and loss, of course, in dollars. Yesterday, the amount of realized profits didn't really increase, and I'd even say it has decreased over the past few days, even though we broke through a pretty strong peak. This means that people are starting to see dollar signs in their eyes again. And you know very well how this usually ends when people don't take profits, then they end up taking big losses. So the longer this indicator doesn't show any increases, the greater the chance of a wipeout to the downside, meaning a clearing out of all the long positions or people who recently bought swing trades on spot. So think carefully about what you want to do with your positions at this point. Isn't DCA out perhaps a good option in the current market situation? And now let's take a look at Bitcoin realized profit and loss. Here, on the other hand, we also haven't seen any significant realization of losses despite Monday's short squeeze. So it's worth keeping in mind that those losing positions are still open, my friends. So just as we can go down for unrealized profits, we can also go up for unrealized losses. And the question you have to answer for yourselves is, where do we have the bigger delta? Where do you think the chart will go for liquidity first in order to continue building momentum on the chart? And that's all, my friends, when it comes to on-chain data. Now we'll move on to the QA, but remember, we're at such a critical point in the market that, in my opinion, you should really listen to yourselves right now. You should listen to, well, actually, your own portfolio, and for heaven's sake, not your mother-in-law. In any case, figure out where you want to go, whether a bit more profit is still worth it for you, or if it's better to just take part of what you've already earned and watch what happens next on the chart, so you can possibly buy everything back at a lower price. My dear friends, that's all for now. Thank you very much for watching this episode. I hope you enjoyed it. If so, give it a thumbs up, subscribe, and hit the bell so you don't miss future episodes. In the upcoming episodes, very important information will be shared about ByBit EU and how we will navigate the futures markets in Poland, as well as what you will need to do so that in reality, nothing changes for you. So thank you all very much. I bow to you and wish you a pleasant day. And see you next time.